Good good morning, everybody. Jack Leeson with StartupTrading.com. It is 9:07 here in the morning on April 7th. We are down, and we're down last night another 5%, which was like 15% in 3 days. I have never seen that. A couple of things I've never seen have happened, but the longer you trade the markets, the more things you see that you've never seen before. Um, and each one is just goes to show like how wild markets can be, despite that apparently the smartest people with the most money and the most research and yada yada yada. um, the market is still often mispriced, and that's what we do as traders is look for those opportunities. But I was talking to a friend of mine who he said it was that move was I believe the entire move maybe was a 9 sigma move. I think he told me. I'm not 100% sure on that, but basically nine times the priced in model, which doesn't seem hard to believe whatsoever. Clearly, risk was mispriced, and for the first time ever, I have never seen a negative 100 complete on a daily short. I have never seen, like, we look at like negative 61s maybe. But not even during COVID, I don't believe we completed a negative 100 that big at least. That big at least. But oftentimes, if we do complete a negative 100, it can actually act as a support level. So there was a halfway back in, this is the most normal example I could give you, or the closest example in August. There was a halfway back short with that literally bottomed at a negative 100 on a Sunday night. This is it's this on scale. This is like 1,000 points. This was 5, 5, 6, 8, like 400, 500 out of 400. So this is 400 points, bottom on a Sunday night. This is I don't think we're getting that Monday that everybody was talking about because too many people were talking about it, and many other reasons. But I don't think we're getting Black Monday. Okay, personally, we have completed this negative 100% profit target. We completed the negative 23 yesterday, or I should say Friday, last trading day. Now, what a negative 100 is, if you guys don't know, it's actually the same distance of the initial leg down. The initial leg down from the all-time high in the the ES here, which I don't believe we made one in that Nasdaq. I think there was some divergence on the daily there. And this was just such a beautiful short setup. Absolutely beautiful. We talked about it when it traded, but like you just don't think you're going to be here 2 weeks later. But, that was on the chart on the 24th. You just don't think you're completing the negative 100. And that's normal. Why would we? It's a 9 sigma move. But that's markets. So anyway, moving forward, at any time we do have a bear market, it is in traditionals. So at any point in time, whether today ends up being lower, maybe we do go lower, maybe we get that, Monday, Black Monday, which I think will give the market confidence if we don't. This next traditional is at some point what we will rally to. We will rally into this next traditional. And that's all the way up at 53.27. Now, that may take some time. There's other valid setups before that, one of which being that we should at least see participation on. And this, I will draw this low to low, the previous low of the year to low. That 50% retracement is going to be a 51.70, and the 38% retracement, I haven't even been drawing premium discount lines because There's no such thing, or has not been such thing as a support. I haven't been, and also the volatility is just like, I use premium and discount kind of more when I think I know or have an idea of what support looks like, and the markets recently, I don't know. Like, I mean, there was clearly no support on Friday. None. Didn't exist as a word. The 38% retracement is the gap fill in the S&P here today, basically. And I'm going to come down to a smaller time frame here, and I'm only going to draw the larger draws here. There are sequences on lows, and I'll show you what they are, but that 38% retracement is going to take us just above that prior day low here for the ES, and that is a 50.90. Now, that extreme discount line is an overlap of the negative 100, and I posted these levels in the chat last night from my phone. They were on my phone. They were saved in my draws. I didn't even open my computer. I wasn't going to trade at 2 a.m., and this session was realistically too volatile. So we came down into it off the open, low, higher low, sequence out of lows, and then, really here at 3 o'clock, European session open, we start getting some pretty clean entries. Now, as we go into the open, where did we rally right to? Lower mid. Green line, lower mid. We have not traded the midpoint in days. Don't even consider us to have made a bottom until we can cross and close above a midpoint. Now, of course, the midpoint is like almost 200 points, or no, more than that. The midpoint is like 400 points off the low, which is wild. In the ES, the middle of the prior day is 400 points off this ES low. I don't even know what percent that would be. That'll probably be a record for a while of the largest distance. It's an almost 9% higher to get back to the middle of the day from the low of the overnight session. We're not going to see that again for a while. I'll tell you that much. It would take a 9% move to get back to the middle of the prior day. Wow. So anyway, guys, the volatility 5-minute chart here in the ES, 47 points. Drop the size. If you haven't already, drop the size. And like Perry said, I actually think today could be more volatile than what we've seen in a sense of the daily move. I don't think will be as big as Friday, but the intraday moves, could be bigger as far as like the size of the candles. Like we're seeing 200, 100-point ranges every other candle in the NASDAQ on Friday. So, I mean, it's kind of hard to stay in with a 30-point stop or a 50-point stop. It's like realistically, you need like a 100-point stop, which I've never really traded the NASDAQ consistently. I've used 100-point stops. I don't like to. Kind of just depends on the market. But anyway, guys, we'll go to the NASDAQ here, roll over and talk about that market, which has come into, I'm actually going to have to go to a weekly chart, the full 50% retracement. Me and Perry were going back and forth a couple weeks ago about where we thought some of these higher time frame ones, stocks will bottom. And Perry did a video. I actually don't know if he released it or not. But I was supposed to do a video, but I just really wasn't confident enough yet to do the video because I wasn't sure where I thought those stocks were going. But this is the first time in this sell-off where I actually believe we've hit a real washout technical level. There has been other levels above us, but in combination of the exhaustion and panic and support, this is a rare combination where you actually, the panic is clearly happened. 5%, 5%, 3% is panic. Okay. The panic has happened. We are at the full 50% retracement from the lows of the Biden administration pullback. And honestly, I don't even remember why that pullback was happening. or like what the headline was. There's always, looking back in hindsight, there's always a headline, right? Like this will be a headline in 2 years from now. We'll be like, oh my gosh, remember when they put tariffs on for 3 months? I don't know when tariffs land, and I think a lot of people, I was talking to my friends who are a little more like macroeconomic investors, and they're like, the scariest thing is that we're controlling this. And I'm like, yeah, but remember COVID? Like we thought we couldn't control it, and that's why that was scary. The COVID pullback, we couldn't control. The world was shut down. You weren't allowed outside of your house. You literally weren't allowed to do anything. They shut. Nobody went to work. This is tariffs. I don't know. I mean, I thought COVID was a lot scary, but that was really, really fast to the downsides. You know, the magnitude is larger here because, I mean, this is 2020. This is the COVID pullback. I don't know how many of you guys were trading during COVID, but this looks like nothing compared to what we just did. I mean, look at the point wise, and then easy money policy straight to the roof. You know, I don't know what's going to happen, but coming out of that COVID low, this is just technicals, guys. This will just stick to the technicals. There's always going to be a headline. There's always going to be market making events. But this 50% retracement that traded, you know, we spent some time accumulating. This was no chance of E-bottom. Rallied 2 targets, and now we've come into that next halfway back. Now we very well could spend months and months and months accumulating below this 16,400, and we very well could come deeper. I genuinely believe if this general area is not the low, then we could come either all the way halfway back, which is a retest of 2022, and that's 12,000. A retest of 2022 would be 12,000. The 50% retracement pullback from lows always holds. If it doesn't hold, the world's over. I also believe that. But the only other anchor, if we were to come this, and again, I mean, that's going to be that higher time frame. That's going to be about 14,500. Those are the big levels you want to look at moving forward. But you know, Perry was talking about accumulating. You know, we don't know where the bottom is, but within these general levels, that is, you know, where you dollar cost average. That is where you dollar cost average, or you know, but yeah. So anyway, that's at the higher time view that I have here, and I'll take a look at some stocks later today, the big boys, the Mag 7s. But in the meantime, let's go to this daily chart. So we had this extension in the NASDAQ while the ES was inside of a traditional. So in my opinion, like that just goes to show on this hedge down or this move down, the ES controlled the liquidity. Very few people understand that extension sequence existed, and we were following it from February 26. We were following it from February 26. I remember thinking, wow, if we complete this negative 23, that'll be crazy. And now it's like, here we are at the negative 100. It's like, wow, that was a lot crazier than I thought it'd be. Really, what a pretty setup, though. The lows of March to low, it's going to be that same extension here for the ES. That 38% retracement is the gap fill. That's the level today. That's the level today. If we can get there, it's a level today. It's a level tomorrow. You know, it has confluence between a fib and another technical level. The overnight low, guys, it's that halfway back I mentioned, and it was very tradable. Just going to delete some things here. And add some things. These are just previous and potential anchors. The overnight lower mid is the high. That indicator, ever since, you know, Perry and I created it, just continues to prove that there's clearly some program attached around that level. I don't know what the program is, but you know that's a calculatable level, and that consistently acts as support and resistance. The overnights, like we got rejected on it Friday, and then dumpy dump here in the overnight session, high, boom, lower mid. But yeah, so I mean, I'd love to see us retest overnight lows, so you can maybe take them out a bit and then move higher, or looking for moves up into these 38% retracements, which I've labeled here. So 38 of the daily. I do think we eventually get to the 50, but there's going to be sellers at the 38. It's such a big gap between them. But you know, in this market, that's nothing. It's like, what is that, like 300 points or so, 400 points. Anyway, I will share these levels with you guys in the room. Everybody trade safe, size down, and I'll catch you guys there. Hopefully, patiently waiting for some of these bigger levels.